What are DSCR loans? Most people know who are attending, but basic information about DSCR loans, debt to service coverage ratio. So in nutshell, the rent of the properties, mostly for investment properties, rental properties, the rental income should cover the debt by a little more than the rental income. So there's some requirements from some lenders. They want 1.2 DSCR, some 1.3, some 1.1. So different programs. So we're going to calculate how to calculate DSCR ratio in this program, in this call, and we make sure the rent is covering the debt payment. I mean, that's the basic requirement I just said. Most lenders want 1.2 DSCR ratio. That's the average, industry average. Important things are for DSCR loans. As a professional, we have to calculate DSCR ratio prior to submitting the deal because we received so many applications. The DSCR ratio doesn't make any sense, and that will decline the deal. So we have to make sure what is the revenue, what are the expenses, can we add on, and what is the NOI after the expenses. So there's some expenses you can add on too. You can write off and then include in the NOI, net operating income. Calculate the property value with the average cap rate. This is not our job as a commercial loan officer or commercial loan lender. That is basically up to the appraisal, but still we need to see if the property value makes sense. If somebody's saying my property value is $5 million and they want a certain amount of LTV, we don't want to just submit the deal based on what they say. We need to see what is the NOI, what is the cap rate in the average in the area, and then we can see if it makes sense or not. And we check the lease agreements. What is the expiration date of the lease agreement, especially for commercial real estate? Because if you have 10-year leases or 5-year or 20 years in commercial real estate, then if the expiration date is coming for one or two other units, we have to calculate it. It's called, the second point is that the fourth point would be WALT, weighted average lease term. So we calculate all the leases, expiration date for all the leases, and how many square footage they're using, and calculate, and that will determine what is the NOI, what is the value of the property, how much loan we can go up to. And if the expiration date is coming very soon, within 6 months or so, do they have LOI or do they have interest in the vacant unit with the property? The unit's going to be vacant. Do they have any LOI on that? Do they have any new lease agreements on those units? So we have to see those all, especially in commercial real estate. Residential, it doesn't make any difference because most people renew it and you get tenants all the time because they're 12 months term. But in commercial real estate, sometimes you don't get tenants for months and years. And because the lease term is always 5 to 10 years and sometimes 20 years. How to calculate DSCR ratio? It is pretty simple formula. DSCR, debt to service coverage ratio, as I said, NOI, net operating income, divided by debt service. So net operating income you can calculate after all the expenses. So revenue, total revenue minus all the expenses becomes net operating income of the property. And the debt service is the mortgage payments towards the debt. So whatever debt you're acquiring right now, obtaining right now, not the previous one. If you are borrowing $1 million today, we calculate based on whatever the rate you're getting on that loan and based on what is your mortgage loan payment and principal, interest, tax, insurance. So principal, interest, and tax, insurance, you already have the information. So we calculate it and that will become your debt service per month. And based on that, we'll determine the DSCR ratio. So DSCR NOI divided by debt service. So for example, the NOI is $10,000 per month after all the expenses, the revenue minus expenses, NOI, which is $10,000, divided by if the debt service, the PITI, principal, interest, tax, insurance, principal and interest with the current loan you're applying, not the previous one. Most people think that's a previous. No, right now, divided by if it's $7,500, that will become 1.33 DSCR ratio. People who are investing into real estate and all the time, they know that it's pretty simple to calculate, but there's some add-ons you have to make sure that you don't leave that alone. Preliminary questions from sponsors, or if we receive application from the loan officers or commercial real estate brokers or agents, we always ask these questions. These are the preliminary questions before even we submit the deal. So what is the FICO score of the sponsors? If a FICO score is really low, less than 650 or 600, that is totally different game altogether. They don't qualify under a regular DSCR program where they get a better rate. What is out there right now, 6.5%, 7%, or 7.5%. It depends on their FICO score. And do they have experience in investment properties? As just similar to the subject property. So if they're purchasing or refinancing this property, a multifamily property is 50 units property, for example, and do they have experience prior to purchasing this? If they don't, then it's going to be a challenge for them because most lenders want them to have experience. If they have 5 single family properties, that doesn't give them experience to manage 50 units property. So if they have 10 units properties, or 2-3 units, 2-3 properties in the past, or recent past, then it may work to purchasing a 50 units property. And what is your liquidity? That is very important question, especially when you're purchasing the property. Not in the refinance, because you're refinancing, a cash out refi especially, that is for cash out. You're taking money out of the property. So you will have cash after refinancing, but purchase, you definitely need to have liquidity. We always ask for liquidity, especially for first 6 months payment. Do you have those 6 months payments when you gonna be, if you have any vacancy, or how you're gonna manage the payments for first 6 months? Have you declared any bankruptcy or foreclosure? If yes, then how long ago is it discharged? That is a very important question, because most lenders don't touch in, I would say, A lending when you get a better rate. Hard money lenders, they don't care. But when you go to DSCR ratio program, if you declare bankruptcy like a year ago or yesterday, it's really hard to fund those deals. And then they have to change the lenders. We have to go to hard money lenders. Still, they want to see it. They don't care as much, but they want to make sure you have enough equity in the property. You're putting a lot of down payment. Have you ever been involved to money laundering? That is a big no. When you have that, the clients have those money laundering or any judgments, again, any fraud they have done related to money, that is very challenging. We have done some deals with the money laundering they have done in the past. They got discharged and everything, but it's going to be really, really challenging. So better not to have it. What is your net worth? That is also important, because if you're applying for a $10 million loan and your net worth is only $500,000, that is a big challenge, a big no, I would say, because a lot of lenders, they want to see your net worth should be close to the loan you're applying for. Not always, but for especially for DSCR loan, investment property loans, the net worth is, again, there shouldn't be a big gap. It should be close. So question for residential DSCR loans. There are questions for DSCR residential and commercial. They can be different. So what is the purchase price estimated value if it's a refi? If it's a refi, what is the estimated value of the property? When did you buy this property and how much did you pay for it? If it's a refi. Okay, here. How many units in the property? These are the preliminary questions where we judge the deal if it's good to go or not. Okay, how many units are occupied and how many units are vacant? That will also tell us the story of the property. What is the vacancy rate? And what are the steps they're gonna take to occupy to make the property, more profitable? Some people love to buy properties when they're vacant because they buy in the low price, they fix the property, they fill the property with the tenants, increase the rent because the new tenants, you can increase the rent. There's no cap on it, and you can increase the value, and they go refinance the property again. Okay. Is it a long-term rental or short-term rental? It's also important. There's a lot of multifamily properties nowadays, they're doing short-term rentals. But investors love long-term rentals, both sides. Investors who are buying properties and investors who are lending money on these properties, they love long-term rental because you get residual income. It's keep incurring. You don't have to do any advertisement. You don't have to bring new tenants every day like short-term rentals. But there are different investors or lenders for short-term rentals properties. Do you have lease agreements? Especially for long-term rentals, we need to see lease agreements. Is the property, if it's a short-term rental, is the property on VRBO or Airbnb sites or whatever the other sites are? I just know two of them. They should be on the site and it should be stating the same rent they're declaring in their application. A question for commercial DSCR loans, for commercial properties. What is the purchase price again, and estimated value? When did you buy this property and how much did you pay for it? The same like residential. How many units again? I think it's pretty similar. Everything's same. How many units are occupied or vacant? Do you have lease agreements? How long is these lease agreements for? If there's one unit or multiple units, we need to see lease agreements again. When they are expiring. That's very important. Do you have new lease agreements or LOI? Like in commercial real estate, if they're expiring within 12 months, we need to see, do you have any LOI for the units that are going to be vacant? Or the existing tenant, they're renewing it? Or do they have option to renew? Because most leases, they have option to renew 5+5 or 10+10 or 5+2. So if they have it, it means they're gonna be renewing it, or do they have any intent to renew it? Do you have financials of the tenants? So that is very important too. In commercial real estate, sometimes if the property is, we have done some deals like that, the property, it was fully vacant and they purchased the property and they brought new tenants based on the lease agreements, 10+10, the property value went up tenfold. But now we have to see the tenant's credibility too. How strong are they? Are they able to make 10 years, 10+10? So that is very important in commercial real estate. We need to see the tenant's credibility too. because here you can't see financials from the sponsor, from the borrower or the landlord, because they're going to be making payments based on the tenant's credibility or worthiness, how strong they are. Next is it a franchise? In retail or mostly retail, I would say. In some industrial, there's some franchise. We have to see if it's a franchise. It will make application more stronger if the franchise it's a franchise. They have 200, 300 units all over the country, so it tells you how profitable they are. Okay, lending guidelines. They're very flexible. We have multiple investors, so the loan amount minimum is $500,000. You can go up to 100 million. Loan to value, we can go up to 80%. Rate starting from 6.5 and go up fee from 2 to 3 points. Minimum DSCR 1.2. So don't just stick to 1.2 because this is the main lending program we have, where most investors or lenders, they want 1.2 DSCR or above, but we have different program too where the DSCR ratio doesn't really matter. And a FICO credit score 650 and above may get exception. If the LTV is really low, you can get low on the credit score. So for example, if the LTV is 30%, the investor or lender say, they can ignore the credit score, 620, 630, they can give you an exception. It can't be like 500 of bankruptcy. But if you want a great rate, everything up to date, better product, you have to have 650 and above credit score. And the term 5, 7, 10 years. You can lock the rate for 5 or 7 or 10 years. So the longer the term, the better the rate you get. And we have program for 30 years, fully amortized too. You can get one rate for all the way for 30 years. Eligible locations for the property, nationwide lending, except we don't do anything in Dakota, South and North Dakota and Alaska. And property type, single family residential portfolio deals. If you have multiple single family properties, multifamily properties, mixed use, industrial, warehouse, retail, office, hotels. And some people will always ask me, well, what is a hotel under DSCR ratio? Yes. If the hotels are performing like DSCR ratio, and we have some clients, they have rented out their hotels to the management company, and they pay them certain amount of return on their hotels, and that will definitely become a DSCR ratio program. So this is a special DSCR program. It's a small ticket item. Here we don't care about DSCR ratio as much. We can go up to like 0.6, sometimes even 0 for smaller deals. So the loan amount starts from $250,000 to $5 million. Loan to value, we can go up to 70%. Rate starting from 6. Actually, this is not going to 6.5. That's a typo. So the rates for this one is starting from 10%. Because in this program, we don't care about the DSCR ratio as much. It's based on the property equity. It's more of a hard money / a DSCR / bridge loan. So I'm gonna explain how. Points 2 to 3 points. Minimum DSCR ratio is 0.6. Again, it can be 0. Credit score, FICO is 650, may get an extension again if the LTV is very low. Term 1, 2, 3, 4, 5. It's full 30 years and fully amortized, but you can get 1, 2, 3, 4, 5, and prepayment penalty is 5, 4, 3, 2, 1. So most people know in this industry the prepayment penalty. I just gonna explain it. If you keep 5-year term and 30 years amortization, you don't pay any prepayment penalty fee upfront. But if you break the term within 5 years, you pay the prepayment penalty. But if you go lower, for 4-year term or 3-year term or 2-year term or 1-year term, you pay prepayment penalty fee upfront. And let's say you get 1-year term and you pay 1.5 DSCR, 1.5 percent. That's a prepayment penalty upfront fee. And after 12 months, there's no penalty at all. So it's like you can treat this loan as a bridge loan to buy a property or refinance a property in 1-year term, and you're free to go anywhere. You can refinance the property, you can sell the property, no penalty, and you can keep the loan as is. If you can't, you sell the property or you can't refinance somewhere else with a lower rate, you can keep the loan because it's for 30 years. It's not a term, and you don't have to pay fee every year. Like most bridge lenders, they charge extension fee or renewal fee or whatever you call. They charge every time you renew it. So this is a good program for small ticket item. As I said, up to $750,000, then there's no DSCR ratio. You can basically have a vacant property and we can still do the loan under DSCR program, have 1-year term, and then you can decide later after 1 year what you're going to do with the property. You're going to sell it, refinance it. If you can't do it, you still have the loan. So people are calling me all over the place. Okay. 30 years amortization, eligible properties. Again, we don't do in South Dakota, North Dakota, Alaska, and Minnesota. This program is not available there. Property type, single family, residential, multifamily, mixed use, industrial, warehouse, retail, office. All right, go to the next page. Special program again, qualifying criteria. We generally do 40%, use 40% expenses. We don't take the NOI like most DSCR lenders do. And this special program, like small ticket item where you don't use DSCR. So whatever the total revenue, we take 40% expenses and 60% from total revenue used for 1.0 DSCR. So that should be equal to the PITI, principal, interest, tax, insurance. So I'll explain it. And the next line say annual revenue, for example, $120,000. Monthly revenue is $10,000. 40% expenses will be $4,000 a month, and the remainder is $6,000 a month for 1.0 DSCR ratio. That is for properties, or the property loan $750,000 or more. But under that, we don't care about DSCR. And 50% LTV or lower, we don't care about DSCR. If the LTV is 50% or lower, lower DSCR would work. Qualifying PITI is $6,000. The qualifying PITI, if based on the loan amount, if the PITI, principal, interest, tax is $6,000, that will qualify under this program. $6,000 remainder of $10,000 revenue that can be used for PITI. It should be equal. That's for 750 and above properties or loan amount. Again, up to 750, no DSCR ratio, and 50% LTV, no income is required. We can use market rent. If let's say you have a retail unit somewhere, buying for $1 million, paying 30% down, $700,000 loan. It's vacant property. You don't have any tenant. No tenants coming for quite some time. We can use the rental income, the market rental income, and use that income to qualify that under DSCR loan. Again, you can have 1, 2, 3, 4, 5 year term. And if you have 1-year term, you can decide later on where you want to go. All right. About to end. This is a document checklist, loan application, very normal. Purchase agreement, if it's a purchase, current rent roll, lease agreements, personal financial statements, real estate own schedule, whatever property they have owned in the past or they own right now, how much mortgage is pending or balance on the it will give you all the information about your experience of real estate. Last 2 years profit and loss statements and last year's 2 years tax returns um, of the business, offer memorandum of performa, and how it's gonna you can give us performa for next 2 3 years 4 5 years, how are you gonna increase the rent if the rent is low, how are you gonna perform better than now. VOM subject and primary, we go verification of mortgage for subject property and primary if you obviously buying this property as investment property, and we also need to see your primary residence verification of mortgage too. Are you paying on time? That's all we need to see. Usually we ask for 12 months bank statements or cancel checks. Loan balance statement if it's a refi. It's very important. Appraisal, old or new. If it's old appraisal, we can at least see if the value was certain amount 2 years ago, what is the value now? It will give a good picture of the value of the property. If it doesn't make sense, if the property value was $10 million 2 years ago, and now you're saying it's $20 million without any rehab, I know it's not going to work. So, okay. Structure the deal, that is too much information, I guess. So I just give you a brief information about the credit score. This is how we see a good deal. Credit score is 750. They own 3 properties, 10 units each for the last 3 years. It's a multifamily property, 30 units, 20,000 square feet property. Just put a random email, the address, 123 Main Street, Los Angeles. Purchase in certain date. Purchase price $10 million. And estimated property value is $12 million. Gross revenue is $1 million. And usually go up to $750,000 if it's a very good manageable properties. 750 NOI, net operating income, and the loan amount they're asking for $7 million, 30% down, 70% LTV. This will become based on the net operating income and based on the $7 million loan request, based on the 7% interest rate, this becomes a 1.35 DSCR, which is good to go pretty much all the lenders. Nobody's gonna decline this deal. No one's gonna decline this deal unless there's a structural problem in the property or environmental property problem. So it's a good deal. Ideal deal for most brokers and lenders. 70% LTV, 1.35 DSCR, 750 credit score in Los Angeles. I mean, you can't go wrong. Again, that's for refinance. Pretty similar thing. 750 credit score, multifamily, 30 units. They own the properties, Los Angeles. They purchased property for $10 million in 2021. The loan balance right now is $3 million as of today. The current loan balance, estimated property value now is $15 million. And they already rehabbed the property. They spent $2 million. So from 10 to 15, they spent $2 million. Makes sense. 1.25 DS gross revenue. Net operating income is $950,000. And the loan request $10 million based on 15%, $15 million property value, $10 million loan request. It is becomes 66% LTV. And it's a 1.25 DSCR. Actually, no, it's more than that. I think there's a mix up. This deal is good to go too. 750 score, good property area, good size. They have experience, good NOI, good cap rate, good LTV, good DSCR. This is a good to go deal. So this is the ideal deal for most lenders. All right. that's pretty much. And you guys can send me email or ask questions if you have any. Let me see, because I can't see the comments or anything as of yet. Yeah, I want to do 45 minutes, so which is almost 45, actually 35. Yeah, my speed was better than before. So yeah, if you have any question, you guys can send me text or email me acomcapital, acom capital @gmail.com. And visit the website acom-capital.com, and the phone number is there, 619-738-6474. Yeah, I'll try to do at least once a week. I was doing it before, but I'll try to do next week. I'm gonna bring a good program. This is very basic DSCR program. We have some good programs like construction loan program where we can go up to 85% loan to cost. And we have a very good USDA program, United States Department of Agriculture loan program. Most people think that it's for rural properties, just agriculture, but it's you can do pretty much all kind of properties. You can do commercial real estate properties, except residential. But yeah, commercial real estate, manufacturing units. You can do hotels, gas stations, truck stops, all the properties, owner user properties under USDA programs, and it has to be in the city or town where the population is 50,000 or less. You'd be surprised to see that so many cities that qualify under USDA. I don't know exact number, but I think 93% of the United States is it does fall under USDA loan program. It qualifies eligible for USDA program. So we'll try to do, I think, next week USDA program, or a week or 2 weeks after. So if you have any comments or have any question, you can send me and then I'll reply back. All right, guys. All right. See you next week.